Well, let's have a look now at how Chief Market Strategist from the Australian Stock Report, Chris Conway, how he sees all this, and he joins us live from our Melbourne studio. Chris, good to see you. Thanks for joining us. Yeah, now the Aussie market, it is up today. Why are we sort of withstanding this pressure in global markets around trade tensions?
It's a very good question, Helen. Probably what I personally would put it down to is the fact that oil prices were stronger overnight, and recently, over the past couple of weeks at least anyway, there have been some sessions where we've had weak US equity leads, again as we did last night, but oil prices have been stronger, and it seems that our commodities heavy market has hitched its wagon to the oil prices rather than to, as I said, the leads we're getting from US equity markets. As you say, it is very, very surprising to see this today. We have Wall Street futures lower. Obviously the Chinese market, as you said, is sort of falling off a cliff. And iron ore prices have been down, or Dalian iron ore futures at least anyway, have been down between 3 and 4%. So it seems like everything outside of our little neck of the woods is heading lower.
Yeah, and it's interesting, Chris, if you look across the screen, I mean, most of the materials are suffering, and that's probably on iron ore, BHP, Rio, Fortescue, they're down. Atlas Iron is still down today, but that might be around the takeover. But the energy plays are doing very nicely. Santos is up 1.77, Oil Search is up over 2, but even, Woodside's up 1.3. The banks, apart from Westpac, are all in just slightly positive territory. So it's very interesting to see that happening. Now, how are you seeing BHP?
So yeah, look, BHP today, it's had a big swing. It was up 1% at one point, and at least as I was leaving for the studio, was in negative territory.
Yeah, well, it is
and
still.
Again, that's probably tied to those Dalian iron ore futures movements. I actually like BHP though. It is a long position that we hold. As a trader, Helen, I'm a bit more active than probably some of the long-term investor guys that appear on the show. But this is a stock that we've traded actively probably for the last 6 months, and that is because it has been in a nice uptrend. And overall, I'm a commodities bull, in particular oil. So I've been saying consistently, appearing on the show here, that I see oil higher and probably with an 8 handle at some point for the rest of the year. The recent pullback just provides a buying opportunity for me. So yeah, we like BHP.
All right, so just sticking with oil for a moment, how do you see the OPEC meeting coming out? I mean, it's being reported there might be more modest production changes.
Yeah, so there's certainly some within the group, as far as I'm aware, agitating for those production cuts to be relaxed, and that's obviously to make up for the lost production from Venezuela, and also the sanctions that are already placed on Iran, and further sanctions that are likely to be placed. So look, given that the Saudis carry such a big bat at that meeting, and because they want to list obviously part of Saudi Aramco later in the year, they'll be wanting to get the best prices possible for that. So I wouldn't be surprised if they scupper all of that. And
so they want to stick to they want to stick to the production cuts, so the price goes up to suit them.
Absolutely, absolutely right. They've actually previously been agitating for extending those production cuts through 2019 and possibly even further as well. And again, let's face it, like I said, they're the ones that swing a big bat at that meeting. So I would have thought if I was a betting man, I'd likely to be bet on the Saudis.
All right, let's sort of flip around again just before we leave equities in general. What about US equities? Because, they were a bit mixed, weren't they, in overnight trading? I mean, the market is looking for some direction, and is the US market worried at all about Donald Trump's trade war escalation?
I certainly think in some sense they have to be, because let's face it, a trade war is not good for neither the US nor China, but the rest of the world as well. Yeah. And markets really hate uncertainty. So, you had Trump bring the 50 billion, China responded, Trump comes out again and says that he's prepared to go with another 100 billion of tariffs, and China will probably obviously have a response to that as well. So if it just keeps escalating on both sides, it doesn't bode well for anyone. So I think that's where some of the uncertainty comes from. But again, the thing always with Trump, as you would well know, Helen, he comes out and negotiates really hard, and then oftentimes recedes to the level that he wanted to occupy all along anyway. So we question whether some of this is bluster and what what part of it is real and what part of it is just a negotiating tactic. But certainly in the near term, like I said, markets won't like the uncertainty. And US equities could fall further. As I said, futures, at least Dow futures, are down about 200 points already in our Asian session. So it'll be interesting to see what happens tonight. But I think ultimately we get past this. I think both parties realise just what's at stake here.
You mean in this trade war?
Yeah, I think so. Yeah, I think.
Yeah, but it is interesting. It is interesting that Donald Trump doesn't often back down. I mean, yes, he says one thing, and often his tweets say one thing, and then he does do another. But it's interesting. His Secretary of State, Mike Pompeo, has very much taken the fight right up to China. I mean, he's really branded their supposed openness and globalisation as a joke, and called them, petty larcenists.
Yeah, strong words, and no doubt strong words are being used to placate the people that brought Trump into power in the very first place, because he does have another election that he'll need to win in 2020 if he wants to keep his seat.
Right,
so yeah, I'm certainly not saying that there aren't things that the US want out of the US-China trade deal, but I think both of them realise it can't go past a certain point, and I think that's the key thing here.
Okay, I want to move on to some sort of Australian news. Now, Insurance Australia Group has announced that it's selling some Asian assets. Just quickly take us through what they're actually selling. Some Thai and Indonesian operations sold to the Japanese insurer. But the market seems to like it. They're up 3% today.
Market certainly does seem to like it, Helen. Fresh all-time highs, if I'm not mistaken, as well for IAG. And look, it's a similar tact that what, say, QBE Insurance has taken recently, obviously selling off their Latin American division, which was underperforming. Certainly IAG hasn't handled these assets in such a ham-fisted manner. They'll be selling them for a profit of around $200 million. Which again the market would like, and potentially that money gets returned to shareholders. But this is a common theme that we've seen not only with insurers, but you look at the banks as well. One that springs to mind, ANZ, obviously selling off their Southeast Asian assets where it wasn't their core business, it wasn't their core competency. So IAG really just doing the same sort of thing. As I said though, the difference being in this case they will realise a profit, they can focus more on their core operations, return capital to shareholders. And nice if you're an IAG shareholder, as I said, all-time high today.
Yeah, Chris, just briefly, Atlas Iron, where are we up to with that? They've now given MinRes a couple of days to respond to the bid from Hancock.
They certainly have. Look, I think the biggest story here, or at least the takeaway for me, is that Mineral Resources is just struggling a little bit to find opportunities at the moment. Not struggling necessarily as a company, but certainly struggling to find opportunities. We know they missed out on AWE. They'll very likely miss out on this just because the price is too steep. Obviously they weren't really in this one for the assets because the assets are sort of lower quality, but they wanted the infrastructure. Their lithium business is going to wind down, so it just seems that Mineral Resources, they've tried a lot of things, and like I said, still a good company, but they're just struggling to land an opportunity. So I think that's really the story here. I don't expect them to put in a higher bid for Atlas Iron, I should say.
All right, now I just want to ask you about something you've been watching, and that's Autosports Group. Do you like them? Are you convinced of their story?
Not quite convinced just yet, Helen. It is certainly something that we're running the ruler over very closely. Look, obviously the worry here, and I think why the share price has sold off recently, is because of falling house prices on the east coast of Australia. The index was just out again today, showing further house price declines, and the wealth effect that would have, especially in people being willing to spend money on cars. The research does show though that it's usually mid-priced cars, so you think Holdens and Fords of the world, other than say Mercedes-Benz and BMW, that are more affected when house prices fall. So yeah, we think there's potentially an opportunity here, and one of the big reasons for it is SG is supremely placed to take advantage of consolidation in the car market, and indeed the luxury end of the car market. So we're looking closely at it, but haven't quite pulled the trigger yet.
All right, Chris Conway, Chief Market and Trading Strategist at Australian Stock Report. Thanks so much for joining me, Chris.
Thanks, Helen. Appreciate the time.